Good morning, everybody. It's Friday, January 6th. It's 5:32 a.m. Central Time as I speak here. Brian Splitt, good morning.
Good morning, Joe.
Happy New Year. You got big weekend plans?
Actually, sports are starting back up after the holidays, so we've got some travel basketball on Sunday and just a few other things, indoor soccer. So not big plans, but plans I enjoy.
We've got second grade basketball Saturday or tomorrow. And it started off as kind of a circus, but now the team's starting to kind of look like a team after playing for about a month. So we are excited for that. Hey, I wanted to mention your meeting here in Nashville, which is about a month away.
It is. It's a month away. It'll start on Sunday, the February the 5th, with a little bit of an educational outlook. What are chart formations? Not an actual chart or technical outlook of specific markets. Some option information. How do they work? Just very basic stuff. And then the meat and potatoes of everything will be on Monday the 6th. So we're going to have a good market outlook. Very informational.
Cool. If you guys are interested in that, I will put the link to the registration page for the agmarket.net meeting in Nashville. I will be there. Brian will be there. Matt Bennett will be there, of course. Let's get into some of the news here this morning. Argentina's forecast looks a little bit drier. So this map yesterday, this is the Euro model that's on my screen. Yesterday, this looked quite a bit wetter for some of these corn and soybean areas in Argentina. This morning, it looks a little bit drier. I don't know if this is why the market is up or not, but I think a lot's going to hinge on whether or not these rains hit or whether or not you see any sort of shift in the weather pattern.
Yeah, Joe. It seems like we kind of get rain on the weekends, or what that's been the pattern. So we had some rain last weekend and the weekend before that. We get hot and dry in between. We saw corn and soybeans both hit some very good technical support yesterday. The uptrend from the October lows in soybeans and what would be the uptrend from the July lows in corn, and it stopped right where it should, and we're seeing a good bounce. And I don't doubt that this change in the forecast has something to do with that bounce off of those trend line supports.
There's a little bit of conflict in the models. If you look at the GFS version of this, it's a little bit wetter. So I think that the forecast come, say, Sunday night into Monday could be a big deal for the markets. Speaking of those rains we had last weekend, the Buenos Aires Grain Exchange said that they were a positive, but that crop prospects are still pretty much reduced. Bean crop is 82% planted in Argentina. They should be north of 90 at this point. The corn crop 70% planted. They should be like 77. Their wheat crop in Argentina was a disaster this year. It's off like 45% versus last year.
Yeah, and it was really interesting when you think back to the December WASDE report, and the USDA did not address the corn or soybean crop in Argentina. They did address wheat, so I expect that those revisions will be coming next week, and we'll see how far the USDA wants to drop the soybean and corn crop. But this meal market's been extremely strong, and it's hard to envision beans breaking substantially until that meal market runs its course.
A meal rally is a real rally, as they say. That report next is the next Thursday, the 12th. That's going to
Yes.
be a big report. I think there's going to be a lot of changes in there. I think there's going to be Argentina crop adjustments. I think there's going to be U.S. corn demand adjustments. There's going to be a lot of stuff. We'll talk about that next week. We had a terrible week of ethanol production. This was the last week of 2022. Production of 844,000 barrels per day. That was down 12.5% on the week, down 19.5% versus the same week last year. Worst seasonal print since 2012. I think this is because of winter weather and probably the holiday schedule, but this is not good.
No, and I think you're right. When you think back to the weather that we were dealing with, just how frigid cold it was, I think the ethanol run was reduced because of that. And like you said, it was the holidays, so that weather with the holiday probably compounded the effect. So we want to see a strong rebound, and obviously the weather is moderated quite a bit. Temperatures are warmer, so the run should look better on the next report.
I did a premium video yesterday, if you guys are interested, about ethanol demand and also export demand for corn and how there are some problems there. If you guys are interested in that, I went into some great detail and laid out some of the worst case scenarios. Check out the premium deal this morning. We've got some fighting in Ukraine still. Putin wanted to do a ceasefire for the Russian Christmas, and he's not going to get it the way it looks.
Yeah, and Does the market react to it? I don't think it
No,
does.
not
Maybe it gets a
anymore.
small bounce, but yeah,
Yeah.
these day-to-day headlines, I mean, it's a war, right? And you're gonna continue to see, fighting, so I don't think you come in here and try and buy wheat every time, some shooting occurs. That's what gonna happen.
I don't see very many people talking about this anymore, like in regard to the wheat market or to the corn market, just because the headlines haven't moved the market. I still think it's a big deal though. Like I still think it has the potential to be a big deal if things went in the wrong direction. It just seems like, I mean, you watch wheat futures, it just doesn't matter anymore. I mean, nobody cares about this anymore.
Yeah,
You're back to pre-invasion levels. I mean,
there's a lot of markets, and wheat's not the only one when you talk about pre-invasion levels,
oh, we're going to talk about one here in a second.
yeah, okay.
Okay, here's a natural gas chart. Natural gas lost 35% in December. It's already down 19% just this week. This is like a catastrophic collapse in a commodity market. I mean, this is crazy.
And you know what's wild is that regardless of that big drop in the month of December, this was still one of the best performing commodities for the year. Um, so
Yeah, I mean,
even
so you
though,
go from here. I
yeah,
mean, you started off so cheap, and then I mean, you had a tremendous spike, and even with the December drop, you still had a good overall annual performance, I guess.
but back to Dece of 2021 lows in this 350-ish area.
Yeah.
Um, could be some good support. I wouldn't be surprised to see nat gas catch in this vicinity. And if we start looking at some cold temperatures again as we wrap up winter, and maybe this market gets a good bounce off these levels.
So not only futures have fallen apart, but natural gas prices in Europe, like physical prices, are down to pre-invasion levels. They've had kind of a mild winter so far. Apparently, some success in using alternatives to Russian natural gas. Russia provided 40% of Europe's natural gas prior to the invasion. So I don't know if this is a fundamental thing. I don't know if this is maybe because of perceived economic weakness or the idea that we're headed for recession or that sort of thing. But gosh, this energy sector in particular, you look at natural gas, look at crude. I mean, this stuff has not acted well.
No, and maybe the one benefit for corn for ethanol is that natural gas is cheaper, and that does improve margins.
Yeah. We had jobless claims out yesterday, some economic data. They were down 19,000. So we're still like in a pretty darn good looking employment situation. I know we're starting to hear rumors or talk of layoffs. Amazon's going to lay off employees, Salesforce, some other tech firms, but the situation still looks pretty good. Now, we do have a jobs report this morning. They're looking for unemployment to stay steady at 3.7%. Non-farm payrolls expected to increase by 200,000, which would be down from 263 in November. But this is still, really good stuff when it comes to the job market. The job market is still really good by all indications.
Yeah, and it's tough because you keep hearing all this chatter about heading into a recession, and the big banks are talking about it, and you look at the unemployment rate, and things look really good there. But it's one of those things where just talk of recession can start bringing on recessionary behavior from consumers and companies alike.
I think we talked about this the last time you were on, and I kind of ask myself this question sometimes. Can you have a recession with a 3.7% unemployment rate? I found this chart. This is from the Cleveland Fed that I've got on my screen. So this is like these gray bars here. These are recessionary periods. And then your blue line is the unemployment rate. So you've had scenarios where you start with low unemployment in a recession, like the early 2000s recession. You started with like a 4.5% unemployment rate, and then it went up to, close to 6. Even like 2008, you started higher, maybe 5%. The one back in the early 70s, you started, looks like sub 4%. So there is some precedent for that. Like you could start into a recession with a low unemployment rate, but then it inevitably will move higher.
Yeah, and sometimes when you think back to other metrics and you look at Fed policy, and it's interesting. Sometimes the stock market really makes that last push down as the Fed eases their policy from a tightening.
Yeah.
And so, yeah, it's not always. Sometimes it can be counterintuitive on how some of the stuff works.
Yeah, I talk about this stuff because I think the economy is potentially a big deal. You look at like gasoline demand. I probably should have mentioned this in the ethanol part, but gasoline demand's been really soft, and that's not a good indication for the economy and economic activity. If gasoline demand's soft, that means we don't need to produce enough ethanol. I mean, there are implications that can come back to us in the grain markets. I don't know if we're there yet or not, but I mean, this ethanol thing doesn't look great to me.
No, and that's going to be, we know corn for export is the major glaring concern on demand. I think corn for ethanol is going to be something that kind of creeps into the story here. And a lot of people are very friendly on the cattle side because of the lack of numbers out there in the country, and you have to wonder what that means for the feed side of demand for corn. So we could see a barrage on the demand side of the balance sheet on all three categories, and at the same time see the crop increase in size. That would be the typical behavior from USDA. If they increase yield in November, they'll bump it up again in January. So these are all changes that could come next week.
We should see some indication. So that grain stocks report is out on Thursday next week, along with the crop production in WASDE. So you get some indication in regard to feed demand, which is always tricky to gauge. Speaking of cattle, they were mixed yesterday. Feeder cattle were actually sharply lower, but have acted pretty well overall. I haven't seen much. Have you seen much cash cattle this week?
No, I have not.
Maybe. No, we'll see what develops here today, I suppose. Outside markets, the dollar was higher. Was the dollar sharply higher yesterday too?
It was, and it looks like it's got kind of a nice rounded bottom that's been forming over the last month. So I wouldn't be surprised to see this dollar start to push back to some levels, and maybe at the very least retrace some of the break that we had from that close to 115 down to these 103 levels.
You could see some volatility in the currencies today when that jobs report comes out. If you get the right or wrong numbers, people are going to assume that the Fed's going to go one way or the other, and that's going to move the currencies quite a bit. Dollar's a little bit higher this morning, guys. Stock market's about flat. Bonds are flat. Gold's up $2. Crude oil down 9 cents, 73.83. What do you think about the crude market? I mean, it just looks sick to me.
It does. I think there's some equilibrium in the crude oil market around $65 a barrel, and I wouldn't be surprised to see this market get into some new lows. It's in a downtrend, and we continue to bounce around 70. That's been a number that's been talked about by the administration as far as maybe replenishing SPR reserves.
Yeah.
But the market's trending down, and it has been for several months.
All right. Well, hey, everybody have a wonderful weekend. Brian, we'll see you next week. All right, buddy.
Sounds good. Thanks, Joe.
See you guys.